Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, August the 23rd, 2024, with our new slides to make it all look more appealing and all that stuff. But in the end, it is still the same old price charts. And of course, we continue to primarily apply the Elliott wave, but we also do other technical analysis. And as you know, I share intra-week a lot of good tidbits from the news, from X, and all that stuff from very trusted sources and technicians. And of course, in the end, all of that leads us to be about 70% reliable and about 95% accurate when we're reliable. Of course, when we're unreliable, our accuracy is less. But we're not a prophet, right? We cannot tell you all the time what's exactly going to happen. And as you know, and as I wrote yesterday, when things go sideways, Elliott wave is not the best technology, so to say, or technique to better analyze what we are looking at than any other method, because there are so many options available. That's why we have our price levels to watch for the bulls and the bears. Certain levels need to hold. Otherwise, a certain Elliott wave count will fall apart, because Elliott wave is based on strict and hard rules, and it must adhere to those to keep a certain wave count valid. For example, a fourth wave cannot overlap with a first wave in a standard impulse pattern. So all we do is then, of course, anticipate, monitor, and adjust. Nothing different from a medical treatment that a doctor does to you. And we only intervene when we have a rationale for it, of course. When everything goes well, we'll keep it as is. And never forget in trading to apply Jesse Livermore's 21 trading rules. And I know for those that have been me for a while, they probably wonder, why am I going through this? Because we have, of course, new members every time. So we do want to make sure that everybody gets the same base covered. And I cannot hammer it home enough. Stop losses is what will save the day. You have to be able to take small losses to stay in the game. And this slide will perfectly exemplify why we use stop losses, why we use those warning levels for the bulls or the bears. If you're so inclined to short cryptocurrencies, if you can even do that with your portfolio, I'm sure there's more stringent and strict requirements than for ETFs and regular stocks, because of the uncertainty behind it. Always remember that you at some point have to take your losses, because trading is based on two rules. One, minimize your losses, and two is pretty much look at rule number one, and three is maximize your profits. Okay, nobody says anything about profits. First and foremost, it's your losses, because losses go mathematically against you. If you have a 10% loss, it will take 11% to get back to break even. At 50%, it will take 100% gain to get back to break even. At 90%, I think it will take like 1,000% gain or something like that to get back to break even, just to break even. And that's pretty much a kiss of death for your account, especially if you then have all your account in one nest egg, and you should not do that. So losing trades are inevitable. If you cannot losing trades, trading is either not for you, and you should definitely not blame others for your losing trades, because nobody forces you into those trades, because you are simply the loser. It doesn't mean you are a loser, a bad person, but you lost. That's all there is to it. So trading is called hard business, and nobody cares if you win or lose. I would really like for you to win every single trade, but you can't. Why? Because it's a win-win. It's good for you, good for me, good for my business. And if you have these losing trades and you cannot stomach them, and you still want to continue trading, please use smaller position sizes, and please use tighter stops. But don't place them too tight, because then you'll get stopped out and whipsawed and all that stuff. All right, so we went through all of this, and then never forget that we have a lot of different things available for you that you can use to your advantage. The ETF trading alert service has been great this year. I believe our short term is up 20% for the year. You say it's underperforming the market, but the thing is, it's a no-brainer, no headache type of trading. You just simply follow what the system says, no second guessing. And that's the same, of course, with our crypto trading alerts and all that good stuff. Meanwhile, on the left is our wave labeling. We try to follow it as strict as we can, but sometimes we make a mistake, but I think we have it pretty much dialed here. So that said, let's go straight to the charts and see what we have. We'll start with Avalanche. Why do we start with Avalanche? Because similar to that of Matic, this one starts to look better. We might have hit a low, okay? If you look here at the trend is your friend chart, I haven't shared this with you for a while. You can see we have moved back above the 10, the 20, and the 50-day simple moving average, but we're still way below the 20 and the Ichimoku cloud. So it has still some work to do before we get into a very good regime, which is shown here in the November-December rally. When we get above all those moving averages, good things tend to happen. Okay. When we get below it, bad things tend to happen. Very simple delineation. Bottoms always, of course, occur at the lowest point where the worst things could happen. Tops, of course, always occur here. But once we get here, you want to trade the trend. This is a low risk trend trading. Okay. And then, of course, when you start trading this, you go like, how can I avoid all of these downturns? Well, you can never really get out at the top and you never really get into the bottom. So let's say you started buying here on a break above the Ichimoku cloud and the 200-day moving average. You bought at about $12. And then eventually, as you can see here, it rose all the way to 48, but you won't be able to sell all of it at 48. Okay. What you do is, of course, start to sell into the strength. So by the time we get to 48, you should not have, as a trader, all your nest eggs still available. You should only have maybe at the most 50% left. And then eventually you start raising your stops as well. Every single time you sell partial profits into strength, because the higher it goes, the bigger the risk is that it will decline again. And here we had a decline from, let's say, $50 all the way back to $30. That's almost a 50% decline. Again, if you try to sit through this, maybe it's better to rinse, lather, repeat as a trader. A long-term investor might be different. You have different time frames. But this is what I want to point out. So eventually, you're probably going to get stopped out at this low here, which was a relatively important low. It all depends on your risk profile, of course, but that is the way to go. And then you simply wait on your hands till we are back again in a positive regime. Rinse, lather, repeat. Once we broke here below it, you either short the crap out of it, if that's your desired way to go, or you just sit on your hands and wait. Patience, right? Nobody got poor from patience. Most people actually got rich from patience. So please be patient. And now we're starting to reestablish itself. So once again, the risk reward at current levels is pretty much a $19 is your cutoff. That's the risk. And 26 would then be your entry if you so desire, right? Or you're going to wait till everything turns green and we'll have a much better setup that go into the triple digits. So this is the bigger picture, wave count. And as you can see here, we have a top for a wave one based on the monthly time frame here in late 2023, and then an ABC, a irregular expanded flat wave two. It's a little different. So this would then be A, this would be B, and this would be C. Could be all of wave one as well. That is fine. It's a little potato in this case, because bottom line is, as long as this month's low holds, we break above $50, we can reach to the 110. This is a log scale chart based on simple symmetry. Support resistance was at 23, and it is holding on so far a intra-month basis. That's what we're looking here at, okay? It's the monthly closing prices that are critical. That's where the resistance and support levels are also based on. And as you can see here, now we can move to $1.50. Above that, based on symmetry, 110. Above that, based on symmetry, we can move into the 200s for this blue wave 3. And as I shared with you yesterday, Maytech or Polygon has a very good risk reward profile as well. Though nothing has been confirmed from the bullish perspective, we need to get at least back above 0.7. Then above the 10 and the 20-month moving averages, which are both at 0.747-ish, somewhere around there. And if we then really break above 1.3, it is a very good sign that $3 to potentially even $10 is on the cards. All of that contingent on holding above this month's low. So that is your risk and that is your reward. There is no risk of setup. Then we're going to look here at Binance Coin. We have been reasonably bullish for a long time on Binance Coin, thinking it would go to 850, 950, somewhere around there for this wave 5. Now, we could have had a irregular flat wave 4, as we shared in our daily charts. And these are the warning levels for the bulls. If you so think that we're going to go to 850, 950, that still remains our perspective. Okay, that doesn't mean it is correct, but that has been our perspective for a while. And this top here seems to have fallen short of that target. It could have been all of wave 5. Okay, so we now follow 2 wave counts. Both are still looking for higher prices. The first one is about 850, 950, as we've had on the chart for a long time. And these are then the warning levels for the bulls. The first one is 550. We break back below 550. As you know, that is a radar lock on our battleship. The second one is a shot across the bow. And the third one is a direct hit. And the fourth one is another one, and that will make our ship sink. That means this wave count is completely invalidated. Here at about 475, increased chances it is invalidated. And of course, below about 435-ish this month low, 438, all bets are off and the top is in place. That would mean this top is in place. So conversely, we also have, of course, warning levels for the bears. The first one is at about 610-ish. As you can see here, those are the levels to watch. That is last month's high. The second warning level to watch are these closing prices that we had in 21 and in the early January, February 21, and I believe here November, December 21, which matches very closely to this quite weird spike here in October last year. And of course, the highs that we've made in the spring of this year. So that's about 625. The third level the bears do not want to see broken is about 680, 85-ish. And then the last one is, of course, the recent all-time high. Then this is not a B wave. If this is a B wave, then all of wave B should top somewhere around 625, 650, somewhere around there. That's a typical 50 to 76.4% of the retrace that we've had over the last 3 months. So the B wave is still looking higher. And of course, this is also looking higher. So that's the perspective we have, that we're still looking for higher prices. One will top out below the all-time high. The other one will go to new all-time highs. And as a bear, if that's what you're desired to be, then please take these levels into consideration as your stop losses. And similarly for the bulls, take them into consideration. Okay, you can do something else. Whatever you do, whatever floats your boat is fine. I'm just pointing them out from my perspective using my analytical work. And most of the time, these serve others greatly. So here we have Bitcoin. Bitcoin is finally trying to recapture its 200-day moving average. Remember, yesterday I shared this chart with the clear delineation at 62,000. It was support here in March. It was support here, etc. And we've seen a lot of moves around it here in June, again here in May, and then a little bit here in April. And of course, here in late February as well, a lot of moving back and forth around that level. So it's critical. So the 62,000 level was also very close to the 50-day moving average, which is now at 61,486 to be exact. We said if we break above that level, it starts to increase the odds that a new impulse is underway to around 83,000, potentially 93,000, but we'll deal with it once we get much higher. Above that level, we also said we can then, of course, in quite a quick flush, target the 200-day moving average. And we're right there. So this starts to look good as a 1-2, 1-2, 1-2 setup. But we need to see, of course, continuation. So far today, we are back above the 200-day moving average, but I really want to see a close above it. And at the minimum, of course, a close above that 62,000 level. That is critical, because otherwise this bullish wave count I've shown will still morph into a ABC type of pattern that I'm not showing right now, but just wanted to show you, yes, we finally broke above that 62,000 level. That has been stiff resistance once, twice, 3 times, 4 times, 5 times. And hopefully we're now get seller's exhaustion. It looks like we have some sort of triangular pattern developing from the low here at 56,000 to about 62,000. So this is then your roof. This is then the triangular side. And then we have, of course, this path. So if we flip that over, and I'll show you that, symmetry again is critically important. So we have here, here, and here, as you can see. So we can move that a little bit more to this and a little bit more to there. And if we would then add that, you can see that would target 67,000 already on a breakout. A retest of the breakout at 62,000 would not surprise me. Moreover, as you can see, the RSI 5 is back above 50 and back above 70. That has not happened since the top in late July. So also here, it starts to suggest a change of trend, a change of character. We have lots of space left here at the Chinky money flow. It's still pretty much 0 to negative. So there's a lot of possible inflow of money left that could propel us to 83,000. As such, with this bullish wave count, we have raised our first warning level for the excuse me, bulls to yesterday's low, and the rest we've kept so far the same. Okay, we're not yet out of the woods. So the bulls still have a lot of work to do, which is close above the 200-day, close above the Ichimoku cloud, get us above 70,000, all that good stuff. This is the big picture based on CryptoCons on X cycles, the accumulation phase, initial bull, mature bull, and then the bear phase, which are 4 phases of Bitcoin that make one cycle of around 4 years. The current cycle is a little bit different than that of previous cycles. Normally, we see a down move in the initial bull, as you could see here in 2020, as you could see here in 2016. So it is slightly different, but so far the wave count we've had is still legit. And as you can see, we're holding this black uptrend line. It's a little crude, but it's so far so good. And ultimate target here also suggests anywhere between 108 to 140,000. Can be a lot more, can be slightly less, but that would match, of course, with a wave 3 at around 83 to 93,000. Then we get a red 4 and a red 5, red 4, red 5. Okay. So from a Elliott wave perspective, this move is yet to complete all the way to the new all-time highs. That remains our perspective as long as we stay above, I would say, the January low at around 38,000. Excuse me. This is Ethereum. Ethereum, we're still not too warm and fuzzy about, we must admit, and because the whole rally here does not really look like a strong impulse. So we really want to see price, of course, recover above a minimum of 2,800 and ultimately back above the 200-day moving average. So this one still has a lot of work to do. So we're not so confident on the long-term wave count on this one. But once again, as with everything else, and as we've been saying since the August 5th low, pretty much, as long as that low holds, we're going to look higher. It's very simple. So you know what your risk is and what the potential reward is. Looking at some more altcoins, Link starts to finally look a little bit more as a bottom for a wave 2 as well, with this month's hammer candle so far. It held the 845 cutoff. Okay, that is a cutoff on a monthly closing basis, just as the other ones, because this is a monthly chart. And now it has a lot of work to do, and that is, of course, move back above the moving averages and, of course, above the Ichimoku cloud, which is about 28. So for now, this is still a potential wave count that will target somewhere around, I would say, let's see here, from 8 to 35 is 27 plus 35. That will get us into the 60s, 65 for this potential wave 5. It has not been confirmed whatsoever, which will be at a minimum a break back above the monthly moving averages, then back above this potential wave 1 high, and then for sure above the Ichimoku cloud. But of course, for now, we're below it, so that's still a long-term downtrend. Okay, we still believe that we can move much higher, but it's not yet confirmed by price. So from a risk reward perspective, the risk is, of course, a move below 845 on a monthly closing basis, and especially, of course, below this month's low, similar to the other altcoins we showed. Solana, preferred wave count is still for this wave 4 low here this month. 120 has been holding for eternity now. 1 month, 2 months, 3 months, 4 months, 5 months, right? and technically the previous months well, is also 6 months in a row 120 has been holding, because if we don't hold 120, we're going to go to 85. Below 85, we're going to go to 45. Very simple symmetries. And this has worked in the reverse very nicely as well. We said if we break above 27, we're going to go to 45. Break above 45 on a monthly closing basis, we go to 85. Break above 85, we go to 120. And we said if we close above 120, we will go to 210. So nothing has changed here at all. This has so far followed this path beautifully. And if we can break once again above 210, we're going to go to our ideal final upside target of around 300 for Solana. But we have no confirmation just yet, other than this current price action looks pretty ugly and corrective, in the sense that this is most likely a fourth wave, but not yet confirmed. So far we only have 3 waves up since the 2022 low, and we'd like to see 5. But what we like is not necessarily what's going to happen. We can't predict the future. So far we've been tracking 3 waves. So now we have the question mark 4 and 5. After 3 waves up, then the market can decide to make it into 5. Doesn't necessarily have to be 5, because of new data and information that becomes available for the market to decide, no, this was only 3. It's a B wave. We're going to retest stuff again on the downside. Moving on to the iShares Bitcoin Trust, beneficial interest. It's called IBIT. Looks like the 1-2 setup with a very shallow wave 2 is the preferred wave count. Remember these blocks? So the typical retrace for a wave 2 is anywhere between 50 to 67.4%. And then you can have retraces that go to about 38.2 or even 23.6, right? So most, of course, occur in the 50 to 62, but doesn't have to be. And we got a little bit more than 38.2. Oh, well, it happens. And as you can see, this one starts to look constructive, with price now trying to break back above the Ichimoku cloud, the 50, the 20, and the 10. IBIT hasn't been long enough around to produce us with a 200-day moving average, so I just don't have it yet. Okay, it will come eventually when it has been trading enough. But this starts to look pretty good. And as we've said all through August, as long as the August 5th low holds, we're going to look higher. It looks here like a leading diagonal wave 1 and 2, and now we should be in this wave 3, but we have no confirmation just yet. That was a wait for a break back above the Ichimoku cloud as well. And then, of course, above 40, all those good stuff. But this starts to look good. And as we've said before, as long as we hold this low, you're good. And so far, it has been good. That is a move from 28 to 36. That's a gain of $8 already. I'm not saying that one should have bought exactly at the 28.25 low. That would be fantastic if you did. But regardless, this starts to look good. Okay, so we continue to stay bullish as long as we stay above our critical warning levels. So we can raise those warning levels for the bulls. Okay, the first one is then, of course, yesterday's low. And the second one would be, I would say, somewhere around here, this low here. And the third one would be, of course, there and this. So these are the warning levels for the bulls. Okay, so we can use those to minimize any potential losses. All right, so that's how we go about. And none of that limited mental capacity remarks that someone give. Oh, so you're saying it could go up and down? Yes, exactly. It's all contingent on holding above certain price levels. That is all we are saying, because we cannot predict the future. But for now, we've continuously said, as long as the August 5th low holds, we continue to look higher. How exactly the price is going to fill in, we don't know yet. We don't know how the wave 2 is going to fill in. We don't know how the wave 3 is going to set up, what the ones and the twos will be to the exact T. But we do know that as long as those lows hold, we can move higher, and that we can raise our warning levels. Easy peasy. Now, this is a study from Marat that I presented a while ago, where we looked at the Chaikin money flow and what happened to Marat when the Chaikin money flow went pretty much below 0.35. Why? Because it touched upon it in August. So we had a low here in April at that level. We were very close to a low here in October last year at that level, the CMF at 0.35. And then we had here definitely more downside first. And then from there, we had a good upside, right? As you can see. So from there, we would have entered at $8 if that one was so desired. and then you had a upside potential to about 20. So okay, $12 is a little bit more than 100, like 125%. But you also had downside risk here from 8 to 4, almost 3. So it was still a lot of downside risk. But the October lows were good. The April low was good. And then we had pretty much here a secondary low. So it did suggest that we were getting very close to a significant low. So far, so good. Okay, so we're now up at 18, but also here, Mara needs to get back above the 20 to 15 Ichimoku cloud to get a lot more upside going. As you can see, no edit wave count on this. We're just looking at the Chenkin money flow. If we want to study it further, look at the MACDs back here, and back here. All of them bottomed out, okay, and started to rise. And that's exactly what we're seeing now as well. Well, all of this suggests we should look for higher prices. This is the bigger picture long-term wave count, a 1-2-1-2 setup. Wouldn't surprise me if this is the case. And we're going to look then into the triple digits for a finalization of this wave 3. So this is a slightly different wave count than the daily chart, but that's okay. This still looks reasonably good. The daily chart was looking higher for a wave 5 into, I believe, the $90s to 100. So that's what we're aiming for this one as well. And as you can see, as long as this month's low holds, we can look higher on a monthly basis. So far, we still have a couple of days left. It is trying to recover back above the critical moving average, the 10 month, 20, 50, and 100. The 100 month is at 14 and the 50 is at 18.3. And the 10 is even at 19. So it's got some work to do, but we're getting very close. And again, that it means good things can happen over time. Last but not least, another technical analysis similar to Bitcoin, as I presented that could target 70,000. We see here this potential triangle forming. You see all these lows here that kind of follow this edge of the triangle. And then, of course, we have some highs here at around 17 and 75 cents. And a breakout, as we're currently experiencing, can target based on simple symmetry here from the low to this triangular high and then up 22.10, which would be a 62.8% retrace of this entire decline. And then we can restart once again our wave count, see if we get 5 waves up, all that good stuff. Okay, but for now, also this one suggests higher prices. Don't be surprised if we see a retest of the breakout and then move higher. It often tends to be the case. Doesn't have to be, but don't be surprised if that's the case. And of course, the retest needs to hold. If we fail, then we fail miserably. And this is a potential. It doesn't have to be, but this is a potential based on a reoccurring pattern that often works. Again, 60% of the time, it works 100% of the time. But from that breakout level, it's 24% gain. So it's nothing to sniff at. This is pretty good and will get us also above the 50 and the 200-day moving average. So that is a very constructive move as well. So let's see where we're going to get, and we'll keep an eye on this technical setup. A little bit more about Mara. Why? Because if you don't want to trade the cryptos, this is a reasonably okay exposure to the cryptos, as it tends to move in a similar fashion. Not all the time, again, most of the time. So here from 14 till 17, actually Mara here in black moved opposite of Bitcoin. And then it started to move in conjunction here, late 17. And then, of course, we had our decline, we had our rally, we had another decline, and then the rally all the way 20 to 21. As you can see here, since 2017, it's been quite in phase. Now, Bitcoin was making new all-time highs. Mara did so in 2022 as well, but currently it is not. So it doesn't always have to make new all-time highs because Bitcoin does so. It is simply a chart where we have this nice correlation that when Bitcoin moves higher, most of the time Mara will move higher in support as well. All right, so that is all I have for today. We have, of course, completed most of the coins we're following. The last one is Cardano. I'm still not too keen on that one yet. I might miss the boat on it, but for now, these are the ones I wanted to point out that start to look constructive. And always remember, the trend is your friend. Of course, we try to find the top and the bottom, but they're very difficult to get from a trading perspective. And it's better to be on the right side of the trade than to try to nail tops and bottoms. And always and only think about your risk management. Profits will follow. That's fine, but don't think about profits. Think about your risk management. That is key to success in trading on whatever time frame you feel comfortable with, and use the time frame you are comfortable with. This chart can also be applied to a weekly chart, can it be applied to a monthly chart, can be applied to an hourly chart. And there are many ways to make money. This is one way, and what it does is, yes, you will not find the low, but it will pretty much increase the odds that you will be on the right side of the trade, and that's key to um, enjoyment of trading. Because if we don't enjoy trading, then why should we do it? If you enjoy trading, then it is the best job in the world. And currently, I feel I have the best job in the world. And I hope you feel the same. Take care, trade safe, have a great weekend, and I'll catch you all next week.